If you have heard of Bitcoin, the question that's probably on your mind is, should you buy some right now? And if you already own some, should you buy more? In this video, I'm going to show you why the bottom is already in, why now is the time to accumulate, and why Bitcoin is expected to go up. This video was put together from information from the Adamant Capital's recent report, and it's the same information that hedge funds and VCs use and they're acting on today. So stay tuned. Hey market disruptors, welcome back. You know, on Thursdays I'd like to talk about investing specifically into new technologies, disruptive technologies, and of course Bitcoin is the most disruptive technology that we've ever seen. I believe it's the best asset class that we've ever seen, at least over the last 10 years, and it gives us the best risk-reward setups for investing, at least right now. Now, I like to do fundamental analysis. You know, I talk about fundamental reasons, big macroeconomic reasons, political reasons, why things should move over a long period of time. I don't care about short-term movements. I'm looking at the long term. And so today we're going to talk about fundamental reasons that Bitcoin is in accumulation, it is in the bottom, and why we expect it to go back up. Now, with fundamental analysis, we use it to determine potential. Again, like I said, long-term potential. And the goal, you know, of using this approach, this fundamental analysis, is not to estimate whether or not the coin's at a fair value, but really, is it a fair value based off of its future potential? That's what we're trying to figure out, the future valuations. And so we want to see some of the relationships between the speculators, the users, the savers, and et cetera, and that's what we're going to dive into. Now, hopefully you like that. If you do, give me some thumbs up. I'm going to get right into it. I'm going to talk pretty quick here because I got a lot of information to go through, and I want to make sure I get into it and don't keep you too long. So I don't want you to glaze over. So anyway, I want to show you why we think the bottom is in. Now, this is information I have taken from Adamant Capital's report. I'm going to put a link to it down in the show notes below. If you want to go download the full report and read it, I highly recommend it. It's a great report. This is the same stuff that the venture capitalists and the hedge funds are using, and they're making their decisions off of, and it's good enough for you. And I'm taking the time to break it down to make it easy for you. So they made the case that the bottom is in. Now I'm going to break it down, show you why. As you can see from this chart, the market kind of dropped, and they are making a case that the bottom is in. And there's a couple things that they did. Now, one of them is this unrealized profit and loss. It's a really cool metric. It's a really cool way to look at things. And basically what they did is they look at all the coins in the blockchain, and they can see, you know, all the coins, it's open source, obviously. And so what they do is they look at the days of the Bitcoin, how many days they've stayed dormant. And they can look at those days, and they can realize, or they can kind of calculate what the profit and loss is on each position based off of when they were put in there and how many days they were active and so forth. What they've done is they've taken this number and then they've discounted the fact that there's about 3 million coins that are gone that'll probably never be recovered. It's an estimation, of course. We don't know exactly, but what they've determined based off of these calculations is that the total market has an unrealized profit and loss of about a 3% loss, which means it's almost at break even. And so the holders that are still there are almost at break even. And so that kind of shows that the bottom is in. If people were really far underwater, that might be a different story, but the market's kind of at a break even. It's just one metric that we look at. Another metric that we look at to see if the bottom is in is capitulation. If you've been in the market for more than a year and a half, this is probably a word that you've heard a lot of, capitulation. A lot of people think that we had to have capitulation before the bottom is in. And basically what capitulation is, from 20,000, 18,000, 12,000, you know, the weekends keep selling, and then we kind of like leveled off on the selling. And people were saying we need capitulation, which is just that one final, just like rage quit. Everybody's just over it. And so we sell, we go down like this, and then finally just forget it. Everybody's out, right? And that's what we saw. We finally got that. The hodlers, they held on as best they could. The weak hands sold, weak hands sold, weak hands sold. The strong hands held for the first 3 quarters of 2018. And in November, on November 14th, the price dropped from like 6,000 to about 3,000, like a 50% drop. And that was it. That was whoever was left, whatever weak hands were left, said, that's it, I'm out. I'm done. And we saw this massive capitulation, and you can see this giant drop, a 50% drop, and it's panic selling. It's people just saying, forget it, I'm out. It was the biggest movement of coins that we had seen since February of 2018 when the markets really started to tank. And so it was a big deal. That was the capitulation that people were looking for. Even on Google Trends, if you search the trend for buy Bitcoin, you'll see that trend on that search term is way down. It's actually all the way down to March of 2017 when Bitcoin price was only at 1,500. And so capitulation is another reason why the bottom is in. Another good indicator that shows that the bottom is in is this drawdown analysis they put together. And basically what this does is it tracks the Bitcoin price since about 2010 and shows, the bubbles and the bear markets and the bubbles and the bear markets and over and over and over. And you can see the drawdown from the high to the low of each one. And now, I've said it over and over and over again that investing into Bitcoin is different than investing into stocks and bonds and real estate and gold. And if you're one of those investors and you're trying to apply that same methodology, it's not going to work. So you invest into a new technology, it's completely different, it works different. And so these boom and bust cycles are a little bit different. And they're part of the way that a new technology really comes into the mainstream. And so because the new technology is so new, there's really no usage of it. And so we have this, speculation, bubble, bust, speculation, bubble, bust. And we just kind of see that every time. But what we do see is that this peak bubble to bust has been about the same each time. And so the bust from 2018 down was about an 84% drawdown, which is right in line with the previous bust that we had. So again, the amount of the drawdown shows us that the bottom should be. And it's just another indicator that helps to further that thing. Now, another thing that I really like that they pulled up is this volatility. Now, we know that high volatility is typically a sign of speculation. A lot of speculators, retail traders in the market buying, selling, and the price is going all over. Low volatility typically shows that it's not the retail traders, but it's actually consolidation and accumulation that's happening, and that brings the volatility down. And we've seen over the last 60 days, the volatility has dropped below 5%, which is basically where it's been since 2016. Now, in November, it had dropped down below 2%, which is the lowest it had been in 6 years. So again, the volatility being this low, back down to 2016 levels, shows us the retail speculators are out, the accumulators are in, and again, is another indicator to show us why the bottom is in. Now, just because we have all these signs to show us that the bottom is in, of course, we never know until we're looking backwards. So we take all this information in as best as we can, but we have to understand there's still risks. Everything in life has risks and rewards. Investing is no different, has risks and rewards. And so we want to make sure that we're always aware of what the risks are. All right. And so we're taking a look at these risks and we just want to know what they are so we can monitor them. So the biggest risk that I see to the future of Bitcoin, at least the short-term future of Bitcoin, is this macroeconomic downturn, this giant financial meltdown that we might have. It looks like the world is teetering on the brink of a crash at any moment. And I talk about that a lot. I'm not going to dive into it deep on this video here, but what could happen is if the financial markets crashed, we could see, a lot of selling going on in Bitcoin, because Bitcoin is like a proxy for cash. It's highly liquid, so people could just automatically sell it and go, cover their losses or whatever. And we see this happen like with the equity markets or the bond markets when they crash. We don't know how Bitcoin will do in a financial crash because it really hasn't been through one. It was born in the great financial crash of 2008, 2009, but we haven't really seen what it can do. Now, lots of speculation, of course, some research shows that it is non-correlated, it's uncorrelated, but we don't know. However, what we can do is we can look at what happened to gold during the 2008 crash. Now, we know that during the 2008 crash, gold also took about a 30% hit. However, it bounced back way faster than the stocks did. And so if anything, I think Bitcoin could see about the same as gold did, but I think it might actually hold up a lot better. But that is a risk that we want to be aware of. Some other risks that we want to be aware of are that there could be like exchange hacks, right? When Mt. Gox got hacked back in 2014, it crashed the market. Now, at that time, Mt. Gox was kind of like the only exchange in town. Today, the exchange volume is very decentralized, so I don't know if we'd see that again, but it is something to pay attention to. Also, we could just see heavy selling on the market, and that heavy selling would probably be caused by like the Mt. Gox trustees are sitting on a lot of coins, and they could decide just to dump them. We could see miners capitulate. So right now, miners are producing coins as they mine the transactions. And if the prices drop low enough, they might need the money and just dump their coins on the market. That's something else. We could see Bitcoin fighting happen in another hard fork like we saw in 2017, and that could probably cause some problems with the price. We could see some regulatory crackdowns. We've seen, China talking about banning it, India talking about banning it. In the United States, the financial system has kind of accepted it in, so I don't know if that risk is as high. However, again, it's a risk, and we just want to make sure that we're watching for that. Now that we're past the risks, let's talk about what could push the price up. That's what we care about, right? We want to know why the price may go up, and so a couple things. So first of all, understand how the accumulation process works. So like I talked about, the weekends are selling and pushing that price down. We had the capitulation, which was kind of the final rage quit. Everybody got out of the market. And then at that point now, it's the strong hands that start entering the market and start buying back in. But what happens is we have this accumulation process where the market kind of starts moving like this. And what happens is you still have some people in the market that are kind of weak hands. They've held on this long, but maybe they're just underwater. And as soon as the price gets up to a certain level where they could break even or get a little bit of money, they're going to sell. And then that's going to push the price back down. And then the accumulators, the patient investors will step back in and buy. It'll push it back up. You'll get some people that'll finally get that price they want and they'll sell, and you'll get people to buy, and it's gonna just kind of do this for a little while. And it's gonna be the sellers and the buyers, and they're gonna create this floor. All right, and that's that accumulation process I'm talking about. It's a consolidation process. Eventually, we're gonna create that floor. Now, we've seen this over and over and over again. We saw this in Bitcoin back in from February of 2015 through May of 2016. If you go back to your Bitcoin chart, you can look at that. And the price basically ranged around from $200 to $400. In 2016. Imagine going back and buying it for that price. But at that point, at that price, it looked like it was a bear market. It was never going to go anywhere, and people were over it. And of course, we saw this accumulation, consolidation, and then it led to the 2017 bull market. And that's kind of where we're at again today. Now, something else that we're looking at is innovation and scaling. I've talked about many times. When you're investing into new technologies, it's different. And so what we really want to do is forget the price for now. We want to focus on innovation. Is the new technology innovating? Is it changing? Is it growing? And is it being adopted? Are people starting to use it? And so those are the things we want to look at. And with Bitcoin, we can see that is the case. So we hear people all the time that don't really know what they're talking about. Well, if the internet goes down, you can't use Bitcoin, right? Okay, well now today you can do it through a satellite. They say, well, if the power goes down, you can't use Bitcoin. Well, I say that if the power goes down, we have a lot bigger problems on our hands. You couldn't use the banks either, obviously. However, now we can use mesh networks. We can use ham radios to actually transfer Bitcoin. It's really cool. Also, people worry about the centralization of mining. And I always tell people, when you're worried about it getting too centralized, you have to understand it's the nodes that actually control, that actually decentralize the network. And now today, anybody can run a node. You can buy a little plug and play node from Casa Nodal, plug it into your house and run your node. You can run it from an Android phone. You can run it from an old computer. And so more nodes are starting to pop up, and I would encourage all of you to do that. We're also seeing payment channels. So now people say Bitcoin is too slow. Well, we're seeing these payment channels, these second layer solutions like Lightning, like Liquid pop up. With Lightning, you can make a Bitcoin payment almost instantaneously for no fee. And of course, as you might imagine, it's growing like crazy. As you can see on the chart here, it's growing up like a hockey stick. I think a 46% growth. And so the network is growing, it's innovating. Another thing that we look at is the financialization of Bitcoin. I talked about that a second ago, how the financial industry is actually bringing Bitcoin in. And we've seen that with Bitcoin futures, the New York Stock Exchange, Goldman Sachs, which is probably the leader in the financial world, TD Ameritrade, Fidelity, E-Trade have all announced they're bringing crypto products. And as a matter of fact, in the last couple of weeks, they've started to test those in their customer accounts. And we're talking 5-10 million customers coming right into the market. So that's really exciting. If you're liking this stuff, give me some thumbs up and make sure you subscribe to the channel. Leave me your comments and let me know what you think. If you don't like it, just give me some downs either way. I'm happy with that, with your feedback. I just want to know. Now, another reason that we expect the price to go up, and this is probably the biggest reason, and this is something that I've studied a lot for like the last 10 to 15 years, and it's demographics. All right, demographics are super powerful when you're doing fundamental investing, when you're doing long-term investing. The reason why demographics are powerful is because people's spending habits are very similar as we go through life. So when we're in our 20s, we're all spending money on the same kind of thing. You know, just starting our careers, getting out of college, buying our first car, maybe buying a condo, right? Maybe we're in our 30s, we're starting to get kids and spend money on kid stuff and buying our first house, and then in our 40s, maybe buying a bigger house and buying our kids' cars, and then, you know, the kids leave the house and now we're downsizing, we're retired, etc. So our spending habits are all kind of the same as we move through life. And the baby boomer generation, which has been the largest segment of the population, has basically set every trend our country's seen. But now they're all retiring. They're all, you know, 70, 80 years old. And now we have a new generation. The demographics show that the millennial generation is the largest segment. It's the fastest growing demographic. They were born from about 81 to 96 roughly. It's the largest and fastest growing segment. And the thing with them is that they were born in the digital age. They've grown up with native digital assets. They had this worldview that was formed by the 2008 global financial crisis, right? They had this healthy distrust for banks and institutions. And so for them, it's gonna come a lot easier, right? They've grown up with these peer-to-peer protocols like BitTorrent, the internet, right? And so this millennial generation, they're the largest, they're gonna have more disposable income than any other generation by 2029. And I think they're really gonna push it. You can't count that out. All right, so those are the fundamental reasons why now is probably the best time to buy Bitcoin. That's what the data shows. That's what the institutions, that's what the VCs, that's what the hedge funds are doing right now off of this exact same report I just broke down for you right here. That's why we're seeing that consolidated wedge. The thing that you want to remember is not to try and ever catch exact tops and exact bottoms. That last eighth, that last 10% is the most expensive part. Never try to catch that last part. Just move inside the middle, dollar cost average in. If you like this information, give me some thumbs up on it. If you don't, like I said, give me some thumbs down either way. But make sure to leave me some comments. I'd love to discuss all these things with you down in the notes below, in the comments below. And that's it. To your success. I'm out.